Good morning, welcome to Morning Review on Friday the 29th of July. So looking at the euro dollar first, and yesterday we ran into the daily 34, retraced, eventually bounced around a little bit, currently bouncing off the 4 hourly 8 moving average here. Um, I expected we might have come back a little bit further. As I said yesterday, we'd been a bit overbought into these highs here, and it just ran right the way through into that 200. So expected a bit more of a retracement potentially, but it may just run from this 8. It did all it should have done on the shorter time frames. On the 60 minutes, we got all the way back to the 21s, which equates to around about where that 8 moving average is. Looking from an hourly perspective at the moment, it's quite messy. In fact, when I'm looking at it like this, you sort of see this pattern here, and you almost expect it to roll off the cliff in a sense. It's just been sort of sitting there. Doesn't look particularly wonderful. Um, I've got a trend line that I'll be drawing across the lows here, and if it was to break the lows that well, be more interested in trying to play it back to that 4 hourly 21. But a bounce, well, there is likewise there's a trend line running across not the very highs. If I take the very highs, we've already broken that trend line, I think. Let's just see. Yep, we've already broken that, ran through the Asian session. So there's a nearer term one here, which may just see us push on up and break towards the R1 pivot cable. Well, just another day in consolidation. This phase that we've been in overall now has gone for probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So we're in the 10th day of this consolidation. Still got potential for a little bit more of a push up, but yesterday really did come back. Again, it got overbought on the 4 hourlies and did pretty much what it should do quite early. Yesterday came right the way back. Thought we were going to get a bounce, and then it sold off some more. Where we're sitting now, well, again here, looking at this hourly picture, sort of drawing trend lines across these lows here. Yep, it's just sort of messing around with the hourly 21s at the moment. Got a hell of a lot of support sitting below it because it's sort of sitting. It's just chewing up the moving averages again. Like what we've seen before here. So they tend to get chewed up a lot more and price may run through them. You lose the support from them. So just watching this, but if you start selling off, there's the potential for a continuation move, maybe down towards yesterday's lows there. We've got very little news out for any of these until 9 o'clock this evening, really. It's the key news of the bank stress tests. But before then, US advanced GDP at 1:30 might give a bigger kick. But there's some smaller data. At 9:30, we've got net lending to individuals. Now, this is a figure that would not normally move the markets, but we saw a similar number coming out the other day, which gave about a 20 or 30 pip bounce all of a sudden. News that would never affect the market normally. So we're watching at 9:30 just in case. But beyond that, then, as I say, the next real news is the advanced GDP, the first figure coming out from the US. I would assume it's probably pretty reasonable. Otherwise, we may have seen some figures change when the FOMC did their statement, because I'm sure they're privy of the advanced figures. Okay, looking at dollar yen. Disappointed the market over the Asian session there through the market with their statement. They haven't really done enough as far as the markets are concerned. It's effectively getting a bit oversold here on the 4 hourlies again. It could just continue in this mode, though. It's from a consolidated phase here. It may continue. It is very choppy as we're moving through this current phase. We've already had a decent run up a part of this movement, and it's diverged. So, well, maybe it will pull back to the sort of 21. It did get oversold on the hourlies there as well, so it's a possibility, as I say, that we'll see it pull back towards the 21 later. Okay, Aussie dollar. And well, what we're looking at here, well, it's quite a spiky old mess in real terms. We can't really see. We're just sort of seeing lots of attempts at that sort of 75, 50 sort of range, and then it's just rolling over. So maybe we'll see a break to the downside. We've had this spike here at 4 o'clock yesterday. Maybe we'll see, as I say, a continuation to the downside. Canadian dollar. Okay, so we have got the GDP figure coming out 130, but we've got the US GDP figure at the same time. Now the Canadian GDP comes out every month. It generally has a lot less effect on the markets, but the US number coming out at the same time may just give a bit more zing. Technical term that. Okay, looking at where we are at the moment, it looks like it's trying to push up again for some more. We need to look at oil, of course, and oil's just shoving down. As I keep on talking about this 200, I should have just got an account and shorted the oil price right the way down to 200 earlier the week. That's where it's going by looks of things, and we're seeing it coming down to the monthly. Weekly S3 as I'm talking almost, so it's nearly there. With that in mind, then let's come back to the Canadian dollar. We should be pushing up more probably, and it's effectively through that period it's done quite well retrospectively in terms of the chop here, but that's partially as we've seen a bit of dollar weakness that sort of created that potential. So it's a bit of a balancing act going on there. Normally with the dollar weakness we'd have seen the Canadian dollar roll right over, but that weak oil price is sort of probably holding it back to a degree. From where we're sitting here, we're sort of we're seeing oversold figures into yesterday's lows there. It's pushing up quite nicely at the moment. Looking at where we sort of go from here, well, I just think it may just run all the way up to that daily R1 the way it's going. Maybe on a retrace gives an opportunity for a long side, but we'll see. Obviously, be careful at 130. Okay, that's pretty much it for me. As I said, that's the main data that's coming out today. I'll catch you later. Bye for now.